In fact, Mr. Rajendran joining us this morning on the show. Mr. Rajendran, thanks for joining us. Tell us about, a little bit, just put it into context for us in terms of the history of the bank, the REIT presence, CASA and so forth, just to give us an overall idea.
So this is a 99 years old bank, okay, and we have a very strong track record, and 65% of our business comes from Kerala and 35% from other territories. Today we have 421 branches, out of which 260 are in Kerala and remaining are in other states, mainly from Tamil Nadu and Maharashtra. And we will be expanding into other states. Our initial expansion plan will be on south and west based expansion will take place. Our liability base today is around 15,500 crores and we have assets of around 12,000 crores. Of the liabilities, 28% is CASA. Our cost of liabilities have come down drastically over a period and today it stands at around 5.91. On the asset side, 33% of my book is only gold loan at an attractive yield of around 11.5%, and another 30% comes from SME. Out of the SME, about 10% is coming from MSME, with a yield of around 12% for the SME book, and we have 25% of the book from the corporate with a yield of around 9.5%, and we have the remaining 8-9% coming from the other retail with a yield of around 12%. Today on a portfolio yield, if you look at it, overall yield on the performing assets is around 10.6% today, and we work with a healthy margin. Our net interest margin used to be around 2.1% in 2017, which has improved to 3.4% during the first half of the current year.
What are the primary objectives of the issue, and how do you plan to utilize the funds?
Primary objective of the issue is only to get the shares listed. We have enough capital. We have 23% capital adequacy ratio today. And this issue is not to raise additional capital, even though it results in another 25 crores of capital being raised as a part of the 400 crores raised today. The issue is mainly from the offer for sale from the existing investors who are exiting in this issue.
Right. But large institutions are exiting via this issue. Is that not negative in a sense? If you could help us understand why exactly are they exiting, and who are you anticipating interest from on the institutional side of the issue?
These are all the investors who came at our request. Basically, these are insurance companies who came for a tie-up with us 3 years back. And at that time, we were not having other options of raising capital and requested them to put in 5% each into the company. They came in at a price of 120. Today, they are on a good profit and they are exiting to enable us to list their shares. If you talk about the institutional investors, the anchor book is closed today. You see the institutional interest in that book. 184 crores is raised yesterday and list is available in the public domain today.
Right. Could you tell us about the composition of the loan book, what your focus would be going forward?
The loan book, as I described earlier, mainly 33% comes from gold, 33% from SME, 25% from corporate, and another 8% comes from retail. Going forward, the other retail will continue to grow, which is at 8% today. It is our aim to take it to 15% over a period. Gold book may go up to 35. Gold plus other retail will become 50% of our book. On the other side, the corporate book, which is at 25%, most of the funds are only for parking the funds which we were having surplus earlier when we were not having capital. We went to the AAA and AA rated companies for lending. That book will run down over a period, and we will have corporates which we consciously take it up for a longer term, and that will be confined mostly to 15%. This is the proposed structure. Of course, depending upon the opportunities, it may undergo a change.
So tell us about the asset quality of the bank, the provision coverage policy as well.
Asset quality has improved over a period. The new slippages are very low, as you must be seeing. So this is not only because of the recovery and provision, but also because of the process changes which are brought 2 years back. We are engaged with the CRISIL, and CRISIL has rewritten our entire policy, loan policy as well as processes, and also introduced a new rating system for the loans. And we have segregated the loan sourcing from the underwriting, and administration as well as the monitoring is segregated. So there is no vested interest of any one of the groups. The total overall book has improved a lot. And during the last 3 years, sanction slippages are very low. Not only that, we have improved our provision coverage ratio also from 64 to 80%. We have gone for an accelerated provisioning policy. We provide much more than what RBI wants us to do. So today you look at the book, as we are a Canadian subsidiary, we are IFRS compliant. So entire Indian banking system has not moved into NDAS, but we already moved into IFRS. So when NDAS is introduced, the impact on our balance sheet will be much less, or maybe positive also.
So being a gold loan-oriented bank, what is the outlook on gold? It's always been in an upswing. So tell us a little bit about your strategy over here.
See, gold loan, we are in this business for the past 100 years. This is one business which we are doing over right from day one till now. All my people are very familiar with the gold assessment. And apart from the internal assessment, today we have appraisers coming from outside. And we have also taken gold loan inspectors from gold loan companies to ensure that every 15 days the gold is verified. That has improved the quality of the portfolio a lot. When the industry has 0.36% as an NPA in the gold loan portfolio, our NPA in the gold loan portfolio is only 0.10%. I'm talking about NPA. The ultimate loss is almost nothing. So in the gold, we have introduced a whole range of products like any other gold loan company. Only thing is we are not gone for marketing in a big way and branding in a big way, which we will do now. If you look at the loan to asset value, when the gold loan companies have gone up to 75%, our loan to asset value is only 64%. That gives a huge margin. I need not sell in a hurry if the prices falls by 5% or so. Over a period of 100 years, the bank has not seen any big losses in the gold loan just because of the fluctuations in the gold loan prices. It's a very stable business. Gold is not value alone. Gold is not security alone. A lot of sentiments are attached to gold in the family jewelry. So naturally we respect it. We don't sell in a hurry. That is why my customers come back to me repeatedly. On the delivery side, gold loan company's unique selling point today is their ability to give a loan within 5 minutes, a quicker turnaround time, both at the time of pledging as well as at the time of redemption. This we are able to achieve it. May not be 5 minutes today. Within 20 minutes, we are able to disperse a loan. And similarly, on the redemption side also, we are trying to improve our turnaround time.
Sure. And what about the timing of the IPO? You know, as far as banking trends go, a lot of smaller, aggressive banks have been facing problems. What are your thoughts on that?
Timing of the IPO is one of the best possible today. All the indices are at that peak level today, almost near to the peak. As far as the banking industry is concerned, today the public sector banking system is losing the market share and private sector is gaining the market share because the decision making has come to a standstill across the banking system because of the past experiences. If you have the right people, if you have a quick turnaround time, and if you have right processes, under the confidence to take decision, the market is yours. We are building up these capabilities, and with the accelerated retirement program, we retired many of our senior executives, and we have taken best of the people for each function from either NBFCs or new private sector banks. They are all coming and settling down. This team should be ready by this financial year end. And certainly each one of these product vertical will become fast growing on going forward.
And, any guidance that you can share with us on growth as well as on some of the key parameters?
So I'm not supposed to give guidance during this session, but of course we would be aiming for the best in the industry. The best in the industry today for ROA is around 1.5, and return on equity is 18%, and gross NPA net NPA is on 2 and 1 today, and provision coverage is 80%. Cost income ratio below 50%, and NIM of 4% is what the best benchmark in the industry we are seeing today. It is our aspiration that we must move towards it.
Okay, pleasure having you today on the show. Thank you so much for taking the time out and joining in, and good luck with that IPO.